to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwanese index is up almost 1.8%. Hang Seng is also doing quite well, up 1.24%.
The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Friday's close on Nifty was exactly at the 40-day exponential moving average.
Now, JP Morgan believes that the stock has underperformed the Nifty and the IT index.
The Nifty, 24,940 on the index, about 0.25% higher.
Let's see if we can get reprieve on those 25% additional penalty tariffs before the 27th of August.
A lot of the strength is to do with IT. In fact, IT opened up in the green, but it's only gotten stronger.
The rate cuts should look at a big consumption boost, and thus that is coming out to be an impediment, and the government is working constantly on that.
What's actually buzzing is the entire tech pack today.
US, sir?
Well, that is the day so far, and actually it's not a bad session at all. We're up 100 points on the Nifty. 24,980 is where we stand, and it is IT. So it's all Rima who's going to be doing the talking for the next 60 minutes while I sit back. This is, of course, Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, and Rima with me. Rima, hi.
Hi. A lot about individual stocks, right? Paints, that's the other, sorry, not paints, paper. That's the other sector which is doing very well in the mid-cap space. Lots of other movers. You've got a rate gain, which has shot up nearly about 7.5%. Jubilant Foodworks is coming in for buying. Ola Electric, large volumes. Stock is up close to about 3.5%. Day of good gains, 100 points up now on the Nifty. And talking about the IT index, the Nifty IT index is up more than about 2.5%, with all the large cap IT names batting for the bulls. TCS up 3%, Infosys, HCL Tech, Wipro also up between 2 to 3%.
Absolutely, and that's the big. Actually, it's one sector or the other which kind of manages to hold the index up, and maybe that's the one way to look at it. You know, if you remember last week, there was one day when pharma stocks all rallied hard. Then I think there was FMCG, which of course had a couple of days of sharp run up. Banking as a sector, of course, has lagged. And today there is IT services, which is coming up with very, very sharp kind of gains. But most of it has not been very durable. I mean, it's not been... It's been fleeting in that sense, a day, 2 days, 3 days, and then sort of, you know, there's something else which the market kind of latches on to, moving on to. And maybe that is understandable because there's no real sort of, you know, reason for these stocks to re-rate in a big way on the upside, but perhaps there is a little bit left there just in terms of sheer underperformance, valuations, whatever you want to call it, which enables them to do a little better before the market latches on to the next thing. I guess that's essentially the state of play. 24,965, I think even as we start, the markets are coming off a little bit from their highs. You know, we'll track this one. It's an action-packed next 60 minutes of trade coming up here on Closing Bell. Let me just quickly give you a sneak peek of what's lined up in terms of the programming. So markets around the 25,000 off the highs. IT, of course, real estate, pharma, etc. are doing very well. Broader markets are, of course, building on gains. And Rima and Nimish will talk about what's happening with the IT space in a bit from now. So that's coming up, and that's a focus area. You know, you've got all these JK paper and Tamil Nadu and West Coast paper. They're all flying high. It's government intervention in terms of imposing a minimum import price. How durable is this? Is the question which we will address in a bit from now. You know, financials of these companies coming up in a bit as we get started. But before we get to all of that, let's just quickly run you through how you should position yourself in the last hour of trade. And Nagaraj Shetty is with us to be able to help us with that. Nagaraj, good afternoon. Good to have you here. Your sense of things, what would you do? Indices first, and then, of course, we'll talk about stocks.
Hi, good afternoon, Prashant. Nifty has bounced back sustainably after the 1 day of correction. I think there is a strong support around 24,800 levels, and I'm not expecting this support is going to be broken decisively on the downside. The opening upside gap that formed on 18th of August is going to be a crucial and significant, and such bullish breakaway gaps are normally formed at important bottom reversals. I think this upside momentum is likely to continue. We are going to see Nifty reaching 25,300 very soon.
25,300 very soon. Okay, all right. So, 350, 400 points from here. In this current leg, right, without a break, Nagaraj?
Yeah, there may be some consolidation, but I think in the next 3-4 sessions, we are likely to see continuation of upside momentum from here onwards.
Okay, in terms of specific trade stocks, what do you have?
Yeah, I have two stocks from the long side. First is one Varun Beverages Limited, VBL. Chartically, this stock has been in a larger consolidation over the last few weeks and continuously finding resistance around 200-day EMA and downsloping trendline technically. Currently placed at the edge of upside breakout. Further upside from here onwards could take this stock towards the next resistance. One may look to buy at this point of time. Currently trading around 516.50. Upside target would be around 545. One can place a stop loss at 500. The next one is the IGL, Indraprastha Gas Limited. The stock has been in a larger consolidation phase. Today made an attempt to break above the hurdle of 200-day EMA as well as the range bound action around 210 levels. Currently trading around 211. One can look to buy at this point of time. Upside target would be around 225 and one can place a stop loss at 203.
Thank you very much for that. Some stocks are coming off in the last 30 minutes. We've seen the Nifty slip from levels of 25,021. That was the intraday high, 25,021. So facing some resistance at that level. So we've come off about 50 points in the index, but look at rate gain. That's off about 3.5% from the highs. Bellrise Industries has dipped into the red. That's down close to about 2% at the day's low. Swiggy too has given up. Down close to about 1%. Dipan Mehta, Director, Elixir Equities, is now with us. Dipan, we are seeing the sector rotation day after day. One day it was FMCG on the back of the GST rationalization. Towards the end of last week, Pharma made an up move and now it's IT. Where are you finding value right now in the market?
Yeah, good afternoon and thank you for having me on your show, Rima. Right now, I think we are just going stock specific and focused more on concept stocks, platform companies, companies which give a good set of numbers for the June quarter and not doing so much of a top-down approach or industry-specific buying strategies because I think those may not be working going into the next few months where we expect the market to be range-bound. At the same time, there'll be gains only in selective companies.
Okay, got that. We'll get to the standalone stocks that you like, individual stocks, but let's get to IT sector. That's the big gainer. The index is up close to about 2.5%. Both Investec and JP Morgan are now turning incrementally bullish, saying the risk reward seems to be turning favorable. In fact, JP Morgan's call on TCS, upgrading it to an overweight, was the standout brokerage report of the day that Nimesh had highlighted before markets open. He's back with us with the details and a revision of that. Nimesh.
Well, Rima, as you rightly pointed out, the IT is a big sector of the day, and both the bellwethers, both Infosys and TCS, are actually buzzing on the back of upgrades. So you'll talk about Investec. I'm talking about JP Morgan. So they put out a note today, and they've upgraded TCS to an outperform from neutral, and they've raised the target price on TCS to 3,800. They believe that the stock has relatively underperformed both the Nifty as well as the IT index, largely on back of earnings cut because of lower than expected growth as well as margins. But JP Morgan says that the business model is not broken for TCS, and they expect a growth recovery in the second half of FY26. Now, and also the TCS growth expectations seems to have bottomed out and should benefit from any uptick in terms of sentiment going forward. So that's the big call on which they've upgraded the stock. Even from a valuation point of view, now that the stock has fallen below 20 times multiple and trading below the 5-year averages, with the dividend yield as well, they believe that the risk reward is quite favorable and hence an upgrade to an overweight now. Also, the entire IT benefits because of low positioning. Both FIs and DIs are underweight and there were shorts as well in the system. So maybe that explains that the entire index has done well today and TCS stands out on the back of the JP Morgan upgrade.
Got that. Let me also talk about Investec and JP Morgan. In fact, JP Morgan has also written an overall note on IT. Basically, if you remember about a year and a half too, JP Morgan was the first to highlight that generative AI will be deflationary. Now what JP Morgan is saying that yes, AI-related deflation is manifesting. But now the risk reward is turning incrementally favorable. Let me first get to the deflationary bit. They believe AI will be deflationary in the near to medium term, but will they question the entire existence and the need for IT services? They say not. We do not think it will negate the need for IT services and permanently deflate the services opportunity. They're saying that deflation, going by the past technology cycles, that even in the case of cloud, typically lasts for 2 to 3 years. We are already in year 2 of deflation. Deflation hurts. In their mind, tech deflation can incrementally impact the companies by 10 to 20%, and every year that would translate into 2 to 3% growth. Now, this is on the deflation bit. Lasts for 2 to 3 years, but we're already in year 2, and it has already shaved off growth estimates for IT companies. But on the flip side, as they said, that it does not take away the need for IT services. They believe there will be a cyclical growth recovery after a period of slowdown. There will be pent-up demand. You will need to make AI use cases for enterprises at scale. So there will be that requirement. And plus, valuations are now attractive. Tier 1 IT companies are trading between 18 to 19.7 2-year forward multiple, much cheaper than the 5-year average, because this is the third successive year of a subpar growth. And plus, in terms of a dividend yield, free cash flow yield, stocks are very attractive. Investec too has written, they say the risk reward profile for IT companies has improved. Now IT companies can give you a 10 to 15% return over the next 1 year. They've upgraded Infosys to a buy. In the large cap space, they like Tech Mahindra, Infosys, TCS. In the mid cap space, Emphasis, Zensar and KPIT Tech. Dipan, is this more of a tactical call? The valuations are now attractive after this underperformance, because it's not that as of now there is a pickup in earnings or there is a visibility of a recovery in earnings. How would you read this call by both JP Morgan and Investec?
I think it's opportunistic because they think that valuations are cheap over there. And certainly, you can interest a few fund managers to take advantage of lower valuations. But look at the long-term growth prospects. I think last 7-8 years, these companies have gone nowhere in terms of growth rates. They are in low single-digit growth rates. And going forward also, I think we have seen enough of AI. And one thing is clear that AI is definitely not big-ticket projects. It's smaller projects and will benefit mid-cap companies. So I really don't know any roadmap or any way where these companies can now go back to 15% type of a growth rate. And look, institutional investor may select stocks which even 5-6% growth rate is fine with them because of their size, because of the choice which they have. But from a retail investor, which most of our viewers are, there's minimum benchmark has to be 15% top line. Below 15% top line on a sustainable basis, you have to just drop coverage.
We'll talk about paper stocks, but look at what's happened to JK now. JK is up 18%, 19%. And I think a lot of the move has come in the last 10, 15 minutes of trade. 405, actually, it basically moved up about $10 more in the last 10 minutes or so of trade. And we'll talk about this and we'll try and put some data out in terms of what this MIP, the minimum import price which the government has imposed, really means for these companies. But I was just looking at valuations. JK Paper trades at 1 time FY26 earnings. 1 time. That's essentially data from Upasana. But it's the face of it looks significant. Deepan, any thoughts? I don't know if you track it. There are no real, sell-side analysts who track it or have active coverage on these names in the sector as such. But any thoughts?
No, Prashant, JK Paper, I'm looking on my screen is 19.7 times trailing 12 months. So,
okay, this is...
This must be price to book, actually.
Okay, it says PE, but
price to book is 1.29. So,
sorry, what is that?
Price to book is 1.29.
Yeah, so that's price to book. I think we'll just rectify it in terms of, in terms of that valuation metric. But as Deepan is saying, it appears that it's in high teens. But Deepan, what's the view on the whole? If I look at the EPS last year, it's around 24 rupees. Current price is around 400 rupees approximately. So it's, close to 20%, 20 times, a little less than that actually. What's the view on paper? Sometimes it goes through the cycle. I recall, I think a few years ago on Midcap Microscope, we explained the company at around 135 or 150 rupees. because they were focusing on their backward integration. And that's what helped them with their margins in bad times, and they also reduced their debt. But at 400 rupees, what's your view?
I think it's a good trading bet, and if some positive developments have taken place where their competitive position improves because of lower imports, certainly these companies will benefit. By and large, no, I think there is no new fresh capacity coming up also, and demand will remain steady. So I would, intuitively think that these businesses have got a good runway, and next few quarters may be interesting, may be positive also. And investors can trade in it, and there's scope for P to get traded higher also. All the negative sentiment around consumption of paper gradually going down, that's been addressed. In fact, now it's become more environmentally friendly to use paper as a form of packaging rather than plastic. So I think some long-term benefits are there, and I would be pretty positive on the industry as such. I would go for the market leader, especially companies which are engaged in craft paper, which is predominantly going into packaging industry.
Yeah. Just one thing, this is, the MIP is for a very specific product, which is basically packaging boards. It's for only that. And from what I understand, the two companies which are impacted as JK and Tamil Nadu and ITC, but of course ITC, the numbers are so large, the revenue numbers, etc., are so large. It's like the impact will be, it won't move the needle for ITC in any meaningful way. But we'll still try to get in touch with one of these companies to try and understand the implication. We'll continue to do that. Deepan, thank you very much for joining us. Good speaking with you. We'll take a quick commercial break here. We'll come back with Alok Agarwal of Alchemy Capital Management on the other side. More market discussion and, of course, some stocks as well. Stay tuned.
Welcome back. Let's talk about stocks. Stocks moving at this hour. Hormis is now joining in, putting the spotlight on them. Hormis.
We've had enough discussion on the paper names, but have you looked at the volumes at which these stocks are trading? Now, JK Paper has already had the biggest one-day gain on record now with this 18% up move. Tamil Nadu Newsprint also had the biggest single-day gain since December of 24. West Coast since September of 23. Now, let's take you through the volumes picture. And now 2 crore shares already traded for JK Paper. The 20-day average is 1.5 lakh. Tamil Nadu Newsprint has had close to 70 lakh shares traded with a 20-day average of just around 65,000. And West Coast has already had a 20-day average of 56,000 and has already seen 27 lakh shares having changed hands in today's session. Now, the other big mover on the day today has been rate gain, and is the biggest single-day gain since January of 25. Now, this was, of course, at one point was up almost 10-11%, and we have already had close to 47 lakh shares change hands compared to a 20-day average of just around 4.7 lakh. And this stock is down almost 35% from its 52-week high and just about managing to hold on above its IPO price of around 425. Action Construction Equipment, or ACE, is the one that has had a double-digit move. This is the biggest single-day gain since March of 24, and this too trading on the back of really strong volumes of 70 lakh shares plus having changed hands today compared to a 20-day average of just around 3 lakh. And the stock may be down on a year-to-date basis, down 30%, but between 2020 and the record high which it made earlier this year, the stock was up almost 20x. So it's a big mover over the last 5 years is Action Construction. And last is E-Clerks, and that too is up around 8% in today's session. Is the biggest single day gain since May, and we've already had close to 9 lakh shares change hands, and compared to a 20-day average of just around 1 lakh. And this stock too has done well over the past, and it's up over the last 5 years. The stock has surged almost 10x from around about 370 rupees odd to well over 4,000 rupees. So a lot of movers barring the paper stocks as well. It'll be interesting to see tomorrow how the delivery data shapes up in some of these names.
Thank you very much for that. Let's move on then and get the latest on the GST restructuring exercise. Sources are telling CNBC-TV18 the centre is preparing to roll out GST cuts as soon as possible. Timsy joins in with what she's picked up.
Well, I'm inside North Block, and here what sources are telling me is the fact that the centre is preparing to ensure that the rollout of GST rate cuts comes in as soon as possible. Government is getting feelers of stalled possible stalled sales which are not actually in good spirit here. And what government sources are saying that the government, that is the centre, is likely to push GST Council to notify rate cuts with an urgency. Centre also would like to push GST Council to approve the rate cuts with immediate effect. And however, as we know that the council is now meeting on 3rd and 4th of September, it is a 2-day council meeting which is happening after a huge long gap. Last council meeting was in December, so a lot of pending agenda also. But yes, on the urgent note will be the rate cuts, the new set of reforms that the Prime Minister spoke about. Shifting to a 2-slab structure is what the council will deliberate upon on an urgency. When it comes to stalled sales across sectors, that is the feelers that they are getting, and now they want the consumption to boost and sales to not to be stalled. That is why proper planning is being done when it comes to states. States have expressed their concerns over revenue losses, the potential revenue loss that will come with this structural reform. So Centre is also preparing a roadmap that how these revenue losses could be overcome. Also, if possible, there could be a holistic approach that will be given to the states so that their revenue concerns are taken care of, and so are the concerns of the industry kept in mind on sales and overall shifting to a new slab structure, that is the 2-slab structure that the government is talking about.
Okay, all right, MC, thanks a lot for that. Well, let's welcome Alok Agarwal, Quant and Fund Manager, Alchemy Capital, who joins us on the show. Hi, Alok. Good afternoon. Good to see you in. What are you making of current market setup? And do you think this long-awaited GST rationalization is the trigger that is required actually to help some recovery on the ground? Because everyone's talking about President Trump, but domestic economy itself is soft. Your take?
Yeah, hi, Nigel. Good afternoon. This latest development of rationalization of GST taxes is quite a welcome one. We had been seeing in the last several months that the government in itself was trying to first ease things on the regulatory side during the budget as well. They made introductions on the personal income tax benefits as well. We also saw the monetary policy easing from the RBI at a record-breaking pace. What was now left after we saw especially a couple of months of slowdown in GST collections was something that was a little more widespread, something that has a little more bigger multiplier on the overall economy. And this GST rate rationalization, once it comes through, would be quite a welcome move in order to stimulate the whole economy, stimulate the consumption part, which has been the objective of the government in the last several months that they have stated out. So that will be a welcome one.
Let's talk about IT. Do you think IT stocks are attractive buys at this juncture, even if they don't give you too much by way of growth, considering the entry point, the dividend yield, the cash flow yield, the valuations? Would it make sense to buy now for a 15-20% kind of a pop?
The thing is that, there could be multiple camps on this view, but we tend to believe that, the IT sector in itself actually lacks that kind of growth. So there are various narratives. One of the narratives was that it is because of the rising rates that those stocks are down. But our worries have been more to do with the growth numbers than the margin numbers. So those numbers need to get better off for us to get a little more positive on IT. Valuation-wise also, they're trading at, the sector is trading somewhere around 21 times on 1 year forward, maybe 18, 19 times on 2 year forward. But with the earnings growth rate projected at somewhere around 10% only, maybe something positive goes by, maybe another 1% can get added. That's quite below the overall corporate earnings growth and the overall nominal GDP growth as well. Nevertheless, they are great quality companies. So once things start looking better for them on the growth front, that's when we'll get positive. Right now, the view is not very positive on the sector.
Okay, all right. Alok, what do you think, though, about President Trump? That 27th is almost here and no breakthrough. We get to go into the weekend hoping that, there'll be some kind of easing. Do you think the market has now digested that this tariff is an issue? Or do you think it's not yet in the price? And post the 27th, we'll again get a little bit nervousness that's creeping in? Because the Indian markets have underperformed. Make no mistake about it. Last 1 year, we have underperformed. Last 6 months, we have underperformed as well. But, earnings are likely to come back.
pointed out, last 1 year, Indian markets have underperformed the world index by about 20%, which is one of the lowest in recent years. Compared to the emerging markets, we have underperformed 20% in last 1 year, which is possibly lowest in 15 years. So a lot of this development on this 50% tax is to a large extent there in prices. But one of the ways to look at it is that negative development to a large extent is there in the prices. The response of the Indian government in terms of GST rate rationalization would to a large extent offset that. Then what's left is that the negative is already there in the price and the offset measure is already there from the government. In case we have any kind of reduction of those rates coming from the US side, that could be a big positive. Over the last couple of days, even the Vice President of US made statements like wherein that was kind of used as an indirect measure to put pressure on Russia to stop the war. You never know that we have seen these kind of U-turns earlier from the US side as well. So if I see that these rates do not come through, so we'll have that negative from US side gone away, but the response on the Indian government side to stimulate the economy to stay. Suddenly, that whole issue of higher rates may convert into an opportunity where the economy has stimulated and those rates have reduced.
Which are the high growth sectors that you like right now, where valuations are still palatable? I mean, how would you structure your portfolio right now, Alok?
The interesting part is valuations aren't really very great or encouraging at most places. One has to contend with higher growth rates and higher growth visibility. We find those things coming at a good pace in companies like electronic manufacturing, the capital marketplace, the consumer discretionary. A lot of platform-oriented companies catering to both the finance side as well as the consumption side. Cement sector is actually bouncing back nicely. Some of the other sectors like hospitals and hospitality, aviation, real estate, these are the segments that are seeing very good growth, well in higher double digits. And some of them may have higher valuations, but the runway of growth in some of these sectors is decently high.
Okay, hotels. What about hospitals? I think you like hospitals too.
Perfect. Yeah,
any
we
particular
like hospitals as well.
Yeah, any particular stocks? What's the thesis from here on? Because stocks have done well. So how much more value is left?
More than the value, the best part of the hospital segment is, first of all, we started having multiple national chains or multi-state chains now, instead of being a very, very regional-oriented hospitals. Secondly, if you look at the private side of consumption on the hospital side, the number of beds available in India is far below the overall WHO requirements as well. And the sector in itself is likely to have a benefit of a big operational leverage as well. So that operating leverage, because of the total number of beds increasing by about 40-50% over the next 2 to 3 years, that's likely to play down on the overall earnings front. So the macro demand remains. There's a net more demand out there than the supply. And the supply is coming up over the next 2-3 years. You have a few credible players out there who have demonstrated better execution. So that's why the sector looks quite promising in terms of delivering that growth.
Okay, all right. Well, Alok, it's always good to hear your thoughts. Thanks a lot for joining in. We look forward to having a chat with you. I guess by the next time we chat, we'll have some clarity with regard to Trump's tariffs.
Sure.
For the time being, though, let's turn our attention to D-Street chatter. Nimesh joins us to give us an insight. Nimesh, what are you picking up?
I Nigerian a decent pullback, and again, thanks to the IT index, the Nifty is also trading almost 100 points higher. And again, we spoke about the reasons why the IT stocks are buzzing in trade. But interestingly, from an IT point of view, or from the overall flow point of view, I haven't heard big buying into IT names. And in general, in the market, FIs are better sellers today. So maybe the institutional data could be quite interesting to track post-closing today. So that's something from a flow perspective. From a technical point of view, just trading above the very crucial resistance of 24,950. If you close above that decisively, you might expect further short covering as well. So that's the overall feedback from a market positioning point of view. The one space which has seen some bit of buying traction back is the consumption names. We spoke about, and I also did a piece last Friday about a potential shift from capex to consumption, and looks like some bit of buying has emerged in the consumption basket from the large institutions. So that's one space which is seeing some bit of flows, but neither any buying in IT nor in overall market. In fact, FI is a better seller is what I understand from a flow perspective.
Nimesh, in terms of individual stocks, what's on the list?
Well, the first stock on my list is JSW Energy. That's been consolidating with a positive bias of late. But I understand the work has started for a potential fundraising in JSW Energy. So that's the first stock in my list. The second couple of names where there are block bids. So HDFC, AMC, as well as PNB Housing. Remember, PNB Housing may slip into the F&O ban as well today. But there is buying interest, is what I understand from a flow perspective in both those names. So that's second stocks. Third is Info Edge. Some bit of pullback thanks to the IT names, but in general, I understand for Info Edge, the large selling pressure from a leading FI seems to be largely over, so that explains a bit of uptick there. And the last is Dhani Services, something which we haven't spoken for a very, very long time now. It was supposedly part of the Indiabulls group. Now it's the only stock which is left with the erstwhile promoter. A bit of buying interest is back from larger HNIs is what I understand. And in Dhani Services, the street is anticipating some corporate developments in the next 1 quarter, a potential consolidation of all the businesses into Dhani. That's the potential buzz as far as Dhani Services is concerned.
Got that. In terms of the business of Dhani, Nimish, any you want to add something? I mean,
well, not really, Prashant, because there's not much in terms of business to talk about. But I believe there are still some real estate projects which can potentially get merged into the listed Dhani Services. So that's the anticipation as far as street is concerned.
Okay, all right. We'll keep an eye. That's Nimish with the D Street chatter and listed stocks, etc. as well. We'll take a quick commercial break here. Come back, buy the short-term trading ideas with the technical experts, and a quick look at the F&O data and how that's tracking. Coming up. Welcome back. 100 points, 90 points, 24,965 is where the index is trading at. Let's go to the F&O desk now. Nigel is standing by with an update on what kind of activity action we are seeing. Nigel, over to you.
Well, you'll say actually it is a good trading session, right? With the Nifty up close to around 100 points. The problem today is the shorts continue to pile on onto the Nifty bank. The Nifty IT index, which is the other pillar of the market, that's actually doing well. But the Nifty bank, that continues to get shorts into the system, and we're not really seeing any kind of big signs of a short covering bounce, though as we've seen in the past, that 54,900 mark becomes very, very important. The PCR, earlier we had highlighted today that it goes to around 0.7. That's from where you do see a bit of a bounce. So even in today's trading session, in the first 90 minutes, we did see some kind of profit taking. But the PCR moved into that oversold zone, and that's why it's back at around 0.9. Which is because a couple of those strikes, on the put side, the 25,000 put, 24,900 put, 24,950 put, all of them are seeing a good amount of open interest build up. So there is some writing that we're seeing at that level. But if you look at the 25,000 put and the 25,000 call, well, both of them, you're seeing a fair bit of open interest build up. And on the put side, the premium of there is close to around 85 rupees, but it's down significantly. And even though you're getting the direction right on the 25,000 call, the premium hasn't moved up. You're getting the direction right. I think we should get that up for you. So you're not making any money over there. That's again telling you that there is writing being seen at around the 25,000 call. So to give you a broad range, going by that data point that's up for you on the screen, 25,000 plus around 100 rupees, which will be the rough premium you'll be pocketing. 25,100 becomes the resistance. And the 20-day EMA, which is at around 24,750 mark, that's the important support mark. Stocks that I'm looking at, well, Vodafone Idea. Clearly, it's seeing a bit of a short covering bounce, in today's trading session. You have Crompton, well, out there, you're seeing some fresh long addition. Open interest build up is quite substantial out there. But the next two stocks are going to be important. The one that is likely to exit the F&O ban, when we get the file later today, is PG Electroplus. And that's why that stock is, holding well in the green. Open interest is sharply down. It should be one of those contenders that move out of the F&O ban. It's almost a surety going by the last time I saw. And the other one that's likely to come into the F&O ban is PNB Housing Finance. The last time I checked, the open interest as a percentage of MWPL, well, that has moved to more than 100%. So that should make its way into the F&O ban. We'll keep an eye out on both these two stocks at the end of today. Back to you guys.
Okay, Nigel, thanks very much for that. That's Fusion Options and stocks to keep on your radar as well. Nagaraj is back with us with what to buy or sell today for a reverse trade tomorrow. Nagaraj, what do you have?
Yeah, I'm still positive with the market. I'm expecting this consolidation. Market could move up in the short term, and 24,800 is going to be the strong support for the market, and that could have a strong base for the market in the near term. So I'm continuing with the two stocks, VBL, Varun Beverages Limited and the IGL India Gas Limited, both are looking positive, placed at the current level, that level only what we have discussed. And the IT is the one to look after. Today, we have seen some significant bounce back in the ITs, especially TCS after the small downward correction has bounced back after forming a higher bottom. Technically looking positive, looks like a crucial bottom reversal has been formed. I'm expecting some more upside bounces in the TCS, at least towards the next hurdle of around 3225 levels, at least in the short term.
Yeah.
Thank you very much for that. Some mid-caps are moving around. Pull up an Edelweiss Financial. It suddenly shot up close to about 7.5%. The other one is IKS. Spike seen in IKS. Archean Chemicals. A stock which hasn't done nothing so far this year. Year-to-date return is absolutely flat, 3% up. Today it's showing a bit of an up move and on pretty decent volumes. So you are seeing these moves in individual stocks. Apex Food too, on decent volumes, is higher. Let's get in Parikshit now and the latest on United States 50% tariff in India, which kicks in on the 27th of August. Parikshit, what's the latest here?
Well, yes, that August 27 deadline is nearing, and it seems that the 50% tariff on India is inevitable. But sources tell us those back-channel negotiations are still underway to see if those tariffs can be put on a pause as of now. Having said that, Nikki Haley, the former US ambassador, top Republican leader, and also a former presidential candidate, had some advice for India, and that was take President Trump seriously when he speaks about Russia, work earnestly, work seriously with the White House to find a solution to the Russia-Ukraine war. Commerce Minister Piyush Goyal said that he is approaching, and the Indian government is approaching, talks with the United States on trade with an open mind, even as the External Affairs Minister Subramaniam Jaishankar said that the red lines on agriculture and dairy remain, and India will not compromise on this at all. An important development also taking place in the form of the US and the US President nominating Sergio Gore as the next US ambassador to India. The interesting part is he will not just be the ambassador to India, but also the head of US affairs for South Asia and Central Asia. So sources believe that this will be an important move which will give the Indian government direct access to someone who is a very strong part of the Trump inner circle and will be able to put their viewpoint across on the India-US energy partnership and the overall trade partnership as well. But for the moment, the efforts are to make sure that the 25% additional penalty is set aside. And sources believe that there is also a window of opportunity with the Russia-Ukraine war negotiations still on. And in case the war comes to an end, there could be a positive ripple effect on the penalties on India.
Let's hope it plays out like that. For now, let's get our viewers some perspective then on the impact of tariffs on Indian apparel exports. We spoke to Ajay Sahai, the DG and CEO at FIEO. Listen in.
I think on the first, I think the exports which are being made to the brands, probably the brands have the deep pocket, they have the enough capacity also, and they have the enough margin also to absorb that. I talked to many of the exporters, the apparel exporters, and when they said to me that roughly 50% of their exports goes to the brand, and probably that may continue. Brands have the problem because with the very strict social compliance norm, they cannot shift their supply chain also very quickly. I personally feel that even if the tariff comes on mobile phone, Apple and others have the capacity to absorb that, and to some extent maybe true of pharma. Depends on pharma how much tariff is brought. If it is 200%, of course that may not be possible, but probably pharma may live with some of these tariffs. When it comes to the FTA, I think for me the biggest game changer will be India-UK FTA. We are getting 100% of exports at zero duty from the date of the entry. We have the advantage of the services also because we are the Commonwealth country and we are English-speaking population. That will definitely help. If the situation continues for 6 months or so, definitely it will hit the Indian exports, more so the labor-intensive sectors of exports, because they have, I think to a large extent, focus on the US market also. And in many of the segments, I think the heat will be felt by the country. It's quite logical also if roughly you can say $45 to $50 billion of your export is at stake. that will have some implication on the job scenario also in the country.
All right, let's get in Anand Tandem, market expert who joins us on the show. Hi, Anand. Good afternoon. Good to see you. Anand, tech. Now, it's been a big underperformer. Let's pull up a one-year chart of tech as well as the Nifty. It's Nifty as it is has underperformed the globe, and tech has even underperformed that. But today we're seeing signs that there is some buying. Actually, for the last few trading sessions, there has been some kind of hint of buying. Do you believe that tech is due for a better run from here on? Would you like any of those stocks?
As you said, the sector has underperformed. So for a market which is basically surviving on sector rotation, it may be a reason for you to be buying. But I don't see anything that has fundamentally changed. I was listening to your reports on what the brokerages are saying. And to me, it is mostly hope, because what you're talking about is that, they haven't grown so far, therefore they should go going forward. I mean, that's hardly an argument. The reality is that we are seeing serious layouts. You look at the commentary coming out from Accenture. There is serious trouble happening there in the middle management level. You look at what's happening in TCS in terms of layoffs. That again shows you the same problem. I do not see any major uptick that is going to happen. What I believe anecdotally is that companies are being pressured to offer serious reductions of almost as much as 40% for some of the smaller companies on account of the fact that they are supposed to generate that kind of growth. Or that kind of compression in the kind of manpower required because of the use of AI. Now, whether that will actually happen or not is a different matter, but some of them are actually having to take up contracts with those kind of restrictive clauses. Hardly the best time to be looking at the sector from a growth perspective.
Anand, just an allied question, and you are in the heart of, you're in a state where this is a big trend, right? Global captive centers. I did a program on it, and I looked at the numbers, quite startling. I mean, the growth, of course, it's not new. It's been happening for a while. But I got the two new these GCCs are opening up every week. Of course, the huge ones with 50,000 seating, 60,000, 70,000 seating, and they're all there. Now, of course, it's more specialized. Another thing is, 30%. I was told 30% of the value of these captives comes from pure R&D work. Rest is, of course, outsourcing and back end and all of that stuff. But are there any listed plays on this theme? I don't know if you've thought about it.
Well, almost all the major players are. So if you are not GCC obviously doesn't have to be listed, but most of the Indian companies are working with the same kind of clients, right? At the end of the day, the major verticals will continue to remain financials. They will continue to remain retail, pharma, and so on. So it's not as if the listed players are not already benefiting from any kind of R&D move or outsourcing of any nature. The challenge today is whether or not you're going to be able to add more people, because all said and done, till last year, what we saw was a shift from hiring within domestics to hiring within GCCs. And this is an industry-wide thing. If you look at it, last year, the domestic players added hardly 20,000 jobs, whereas the GCC added a lakh. But overall, the trend is still down, because you are still looking at, over the last 5 years, let's say, or even the last 4 years, the number of new fresh hires has actually halved, if not more. And I don't see that trend stopping anytime soon, because the kind of efficiencies that are likely to emerge, even if they haven't emerged just yet, going forward. I mean, I was talking to somebody and they mentioned that, for example, testing jobs in particular, now more or less, they are trimming very hard their entire testing teams, which employed a lot of people earlier. They may not be the most strategic team, but certainly they used to be a part of the overall cohort of people that were employed. And now they don't think that they need that many, or even perhaps at going forward any, because they are able to generate the kind of test cases and the use cases, etc., using AI, and therefore that's a large chunk of the business gone. So yeah, R&D will continue. I think what you are going to get is a kind of hourglass opportunity where at the top end and the absolute bottom end, maybe there will be some jobs which will still remain. The middle ones are the ones under threat.
I just want to highlight just one more thing before we take a break. Thanks for that input, Anand. Look at Gokuldas Exports. It's the #1 volume-led loser coming through now. And it's already gone through such a massive correction, right? And I think this is perhaps the best example of, the US tariffs hopes dashed. I mean, 2-3 months back, the big hope was, the UK FTA was going to be signed, and this is before it was actually signed. And of course, the fact that with the US as well, perhaps there'll be preferential rates as compared to some of the neighboring countries. It's gone the other way. I mean, Gokuldas was, I think, $1,100 in mid-May. It's at 700 now. Just gone the other way, and very large volume. Number one volume loser right now as things stand. We'll take a quick break here. Anand is with us, and we'll probably ask him about names like this, right? Can fortunes revive if these tariffs are negotiated lower? And are these good bets, or is that not exactly a wise thing to do? Stay with us, coming up.
Counting down to today's close, look at the moves in some of these stocks. JK Paper, 17%, TNPL, 10%, Cross, good volumes, 9.5%, ACE soared 8.5%, Apollo Microsystem gaining nearly 8%, Edelweiss Financial spiked towards the close of trade and up 7.5%, and a couple of these mid-cap IT companies like Nugent rate gain too had a very strong session. In conversation with Anand Tandon now. Anand, paper, is that a space that you've looked at? And any thoughts on this MIP, minimum import price, which is imposed on virgin fiber board?
Well, paper is a very highly cyclical industry, and therefore it's difficult to think about it very long term. Now, the euphoria you see in the market is because we put import duties. Imagine what happens when you look at US putting import duties. Suddenly we go ballistic saying, oh, that's not done. On the other hand, every day we decide that we want to put import duties on some product or the other, and we are all exulting in that. The major issue I have with the market today, yes, there may be short-term requirements to do some stuff like this, but we have become a government-led market. Every day, if you look at your own commentary, you are talking about government changes in taxes, in policies, in GST, in import tariffs, and things like that, rather than what businesses are doing and what they can do to improve their strategic positioning and earn more money. Therefore, it is actually becoming slowly a very low PE market, because if you are going back to pre-91 days where almost everything is controlled by the government, and in that kind of situation, to take a call on any one sector, basically you have to read the mind of the ministers who are controlling that sector rather than trying to figure out what's happening in the market. So that's a long-winded answer to a short question. Paper is not necessarily the most stable sector that you want to be in.
Yeah, today it's doing well on a roll, quite literally in that sense. I was talking about Gokuldas earlier, beaten down, largely weighed down with these tariffs. Now, if you believe that these 50% tariffs are permanent, that's a different story, but I don't think anyone has that view. One of the largest apparel exporters out of India. Any thoughts? If this gets corrected, do you think at 700 it's a good price?
So Prashant, if it gets corrected, is a big if. Nobody thought 6 months ago that Mr. Trump would turn out to be so inimical to Indian interests. We were actually exulting that we have a president who hopefully will be prone to looking at India as a friend, and therefore, we were early in the game in terms of getting a tariff reduction. Instead of that, we not only have a penalty, we now have a situation where, compared to our peers who you would be competing with for exports, i.e. countries like Bangladesh and Vietnam, you are now much worse. So you have to now assume that the tariff penalty goes away. Even after that, you are probably worse off than Bangladesh and Vietnam. So unless you come back to parity, it is difficult to assume that there will be. It's like I said, it's a government issue. You don't really know when and if it will happen. Whether you want to bet your wealth on that is a matter of personal choice.
At the margin, though, that UK FTA is done, and that's an important one. It's a positive one, and maybe this with US and President Trump, it's derai durustai type story. So maybe it's not working out immediately, but hopefully it will, right? 711 on Gokuldas at this point in time. I'll just quickly wrap up things. Stay with us. and we'll come back to you in just a bit, Anand. So the Nifty ends about 100 higher. The Nifty Bank, nothing very much. Actually, it's been an underperforming sector. So 10 points on the Nifty Bank, all told. You got the Midcap index up 50 points, sort of unchanged, and the small cap index ends kind of unchanged as well. So nothing very much out there. I mean, the only clear winners, the IT index, 2.5% of the Nifty IT index. At one point was up 3%. Infosys, TCS, HCL Tech, Wipro, Tech Mahindra are by far the big winners. And Nigel, lots of broader market moves as well.
Well, that's right. It was all about paper today. JK Paper up 16%. West Coast Paper up 12.5%. Malu Paper Mills, that was up close to 11%. In terms of other names that were moving around, Ismo, stock that you have been tracking, that's up close to around 10%. E-Clerks popped up close to around 9%. You had Sri Digvijay Cement. The street hopes that there could be some kind of a deal that's in the works out there. I had spoken to Mr. Anil Singhvi today, and he said he cannot answer that. But, given the nature of the business and since it's PE owned, the street is optimistic that there could be some kind of consolidation. Edelweiss Financial was up close to around 8%, and you had ACE that was up close to around 8% in trade today. So from the broader markets, though there was a relative underperformance, there were quite a few winners actually out there. In terms of other losers that we had today, Gokul Das was down 5.5%. Lokesh Machines was lower in trade. You had Affordable Robotic that was down close to around 13.5%. So there were a few losers as well. But to sum things up, the Nifty goes home with a century of gains, close to around 100 points. One batsman did well, which was the tech index. Unfortunately, the other batsman, which is the Nifty Bank, is struggling to find its form. We'll wrap up on this edition of Closing Bell. You don't go anywhere. The team of Markets Forward is waiting by.